So the first one is the main webinar. It will go over the stocks of the past and some setup for the coming week. I'll show you both. I will show you how the trade progressed. I will show you the charts where I said that this may happen and it happened, and how the stock traveled. So let's, and the other topics I prepared indices. So I will go over the charts of Dow Jones, S&P, Nasdaq 2000. I will give you my targets. I keep giving you targets. Those who are with me, I've given the target long time ago for Dow Jones and S&P, etc. Now I have new targets, so I will go over that. I have also prepared presentation on what to do when the targets are hitting. When I send the alert, I give out 3 targets. I call it green, yellow, and red. And sometimes the target has a range. So I give out in each of my buy alerts, trading alerts. So I will explain how the targets work, in a better position to take profit. So it's explained in the guidebook, but some don't have time to read the guidebook, some still don't understand. So I will explain that. And then there is another question people ask about, how do I select options when after finding the stock? So we trade options most of the time. So how to select the proper option? So I prepared a little presentation. If I have time, I will cover. Otherwise, I'll Monday. Then there is another presentation I prepared on earnings. So earnings season has begun, and there were questions on earnings. So I will explain to you how I trade earnings, and I make money through earnings. To trade earnings like buy calls and puts right before the event. There are other ways to explain, and there are more to explain. So I will explain again, maybe next week or after next week. So there are 4 or 5 presentations. Let's see how much I can cover. This main presentation is long also. How professionals make money in a stock market. The voice is breaking sometimes. Okay, so let me come closer to my laptop. I'm internal mic and speaker. Maybe I'll get an external, and the voice will be a lot clearer. So I'll fix the problem. Okay, and I will read your questions later. Otherwise, I get distracted in reading questions and then going through the presentation. And I also already have many questions. So how professionals make money in the stock market. This is the main criteria we need to understand, how they come in at the right time and make money. They buy right at the bottom line. That's one way of doing it. They do that, and they have a holding power. So they don't buy option right at the bottom. They may be buying long term, but because of their holding power, they buy shares and they held on to it. And once they establish their position, they support that position. So they don't let that stock go down. So they have the buying power. Someone else will come in at that level where the previous buyer has bought. Still below, the stock can break the low of the previous time the one profession or institution bought the stock, but then another one comes up and they buy it, and the stock closes above the low. So that is another indication that there is a major that level. For example, SQ, Celgene. So I think I have a chart I'll show you. So let me explained through the chart. So we need to understand how professionals make money in the stock market. If we understand that, we just follow them and make money. Sometimes they come in right at the, not when the stock is at the downtrend. The stock is still in uptrend and there's a pullback, and they come in and they buy it and the stock reverses to the upside. So we need to understand where they can come and hold that stock. Like for example, Facebook, it gapped down. So can they come? They can come, but the buying power or holding power to hold at the level where they are buying it after the Facebook gap down on Friday. If you have, but if you don't, then you just wait for the day where there is aggressive move. Then you can take option or buying shares. So you just prepare the watch list of your stock where they can come in, and then when the stock is acting. So with anyway, so when I was learning 10 years ago, my mentor, he was not an official mentor, he was like on the group Yahoo, and he told me that Noshi, you need to concentrate on few techniques. Don't run around and learn all the techniques in the world. Don't trade forex, commodity, and crude and gold and this and that. Just focus. And he was experience. So then I found this quote by Bruce Lee, which says, "I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times." So Bruce Lee is saying it, right? So practice one kick 10,000 times. Keep practicing it, because if you practice a few techniques, few chart patterns, there is at least one stock during the day from your basket which will show that pattern, which will show its move. You have to be patient. So if you're patient, the stock will show his move, his what is called card. So then you act upon it. It really needs discipline and patience to only trade when the stock fits your criteria. And when it comes in, then it shouldn't take more than 30 seconds for you to act upon it. It doesn't take me 30 seconds. If this is the stock, I would be interested in further looking into it, trading it. So once that stock comes in my criteria in front of me, I go through my checklist, which is fast. The checklist is earnings. Does it have a proper option available right now? Does it? Yeah, that's another thing. Third one is does it have enough potential for me to make money, or the move is already too late? And the last one is how much I will lose if the stock goes against me. So if the stock goes against me, how much I'm gonna lose? So the less I can lose, the better it is. So that's the criteria. So if the stock doesn't fulfill these criteria, I just wait for another one. Anyway, so and master the techniques which produces high and fast return. So one of the techniques is you buy the stock at the downtrend, and you think the stock has bottomed, and you think the company will turn around. Fitbit, like GoPro, all these kinds of stocks, like junk. So when you think these junk companies will turn around or forming a bottom, if you're sure and you have the holding power, okay, you can buy GE, you can buy Fitbit, GoPro, and just wait for it to pop up. And you may hold these stock for a year, your money is tied up. There's something called opportunity cost. You have to pay your opportunity cost. Your money is not invested somewhere else. Or you can master the techniques and look for the candidates which are moving now, right now, today, right at the open, and you buy those stocks, hold it for a few days or a few weeks, whatever is your holding period, and then get out. So that's one way of doing it. And when you combine the fast move in the stock, like 3 to 5%, and with the option, the return becomes 40, 60%, 70, 80%. Sometimes it's like 1000% because the stock jumps up big time. So um, as a small traders, which I mean, we are not institution, we have limited capital. So the capital needs to be employed in those assets where the return is fast, and we need to shift our capital fast from one to another to another to another. The compounding effect takes place. Otherwise, you just sit in one position forever, and then time that position is starting to move in your favor, the time comes for the market to make its own move opposite your position. So the market is like overbought now. Market is going through some correction, some pullback. So you're already doing nothing is now, guess what? E can become $12 fast. $6 Fitbit can go to $3. GoPro can drop from 6 to $2. GoPro was $100 stock, now it's $6. So I'm sure when GoPro was $50, people were still buying it. When it was $40, 30, 20, 10, now it's at $6 and it hit 100. So when it was 100, we can buy it at 6. It's cheap. It will be a lot cheaper at $3. Money making strategy. So these strategy makes us money fast if you can master it, because that's where the action is. So you want to, right? We go when we want to have a good time, we go to the place where the action is. We don't go to the place where there's no action, right? I like to go to the beaches where the people are there's people having fun on the beach, um, not at the beach where there's nobody, only me there, right? So I can go there to read a book and then come back bored with myself. So I don't want to go there. I want to go where the action is. So action is at here, right? Breakout strategy, breakout reversal. So what is breakout? When the stock is breaking out, making its new move after going through the consolidation. So it's hard. It's not easy to trade stocks when the stock is moving to a new level, because we cannot understand where the stock can go, because it's in uncharted territory. So when the stock or the market is in uncharted territory, you don't have a reference point. You don't know where the stock will go. So that's where the skills required. So the breakout strategy is the stock is breaking out with the volume, breaking the resistance, or making a new 52-week, breaking the consolidation range. So the stock was tightly trading. I think I'll show you in a certain range, and then it broke out like Boeing, like FLR. So I'll show you the chart. Now this breakout reversal strategy is where the stocks move down at some support, and then it moves back up fast. Also, I like the stock pulls back level, and then it's going up furiously. You can do the reversal for the puts trade or the short trade. The third one is the opening range breakout. I explained this in detail in every webinar, and I explain again because I attended before and who did not, who is new in this webinar. So, and I employ this strategy every day. It's like a breakfast. We all take breakfast every day. So this is like my breakfast opening range breakout. It's there always on one of my monitor. I cannot live without it. There are now 603 stocks in my basket. So when there are 603 stocks, I can sort them, which one is moving where. Suppose the market is bullish and I to look at the long. So out of 603 stocks, how do I know which stock is moving? I can sort based on net change or net percentage. I can do all sorts of tricks to see, okay, these are the stocks. But then after, so I can look at it out of 603, I can see like 10, 15 stocks. Okay, these are the ones moving. But then after a few minutes, how do I know which one is still moving after 2 minutes or which one is a new move? So the solution is to have a window with the timer on it. So I have a window with a timer of 5 minutes. So as soon as the time, there's no stock showing on that window. That window is blank for first 5 minutes. And I want it to be blank. The reason is I'm concentrating on my open positions. I'm concentrating on the market. I'm seeing what the market is doing. I'm seeing if the open position needs some fixing, like I need to buy more because the stock look good, or I need to take profit. If I don't take the profit in this initial move during the first 5 minutes, I will miss out the profit. Like Baidu last week, right at the open, it hit the target. I took the profit. I send the alert, take profit. We always give the so so otherwise we miss the profit. So that first 5 minutes is very important. First 15 minutes is important. Half hour important. So during the first 5 minutes, in one of the monitor, that monitor is blank. There's nothing shows up on that window. I have set up the timer of 5 minutes. So as soon as 5 minutes passes, show up in that window. And I have put the volume also. So volume filter is the stock needs to have the volume needs to be there. And I'm showing the slide. I'm not showing any stock right now. So let's say 5 minutes have passed. So 5 minutes have passed. Some stocks will show up. So out of 603, 15, 20 stocks will show up that they are moving beyond the 5 minute intraday. So if they are moving after 5 minutes, it means they are still moving. They were moving right at the open. They are still moving. There is some buying going on. So I look at it. That monitor is very bright on the right side. So I keep an eye seeing those stocks. So if one of those stocks is the one where I already have a position. So I say, okay, yes, so this one is still moving. Let me see this chart. So I look at the chart and I say, okay, I need to take profit or not. If it's hitting the target, I don't hesitate to take profit. Taking the profit is very important. If you don't ring the register, there's no money coming in. So I need to ring the register. And then I look at other stocks, which are, then I know, okay, these are the stocks which I will consider further. Now, after there's another window, which is 15 minutes window. So out of those 10, 15 stocks which were there, suppose in the 5 minute, few stocks will show up in the 15-minute window because they are still moving after 15 minutes. Now it's 15 minutes and 5 seconds. So the stock is still moving. So I know, okay, this stock is still moving up. There is still interest going on. So that requires my attention. I start paying attention to that stock. And then there is another, I may take a decision to buy during that 15-minute move because I know now, based on the experience, that this stock will go up. I cannot wait further. After 15 minutes, I need to take decision, and so I just watch on the pullback, and I do my homework on earning and option, and if I find it everything, I buy it. If the stock is still good, there is no option available good, I buy some shares, and that's it. Then there's another window for 30 minutes, and then after 30 minutes, I set up for an hourly window to see if there is any stock which is still moving after 1 hour, because at 7:30 their major news show up. So that's the way the stock flows from 5-minute window to 15-minute window, then 30-minute, and then final is a 1 hour window. 1 hour window is very important. If some stock is still there after 1 hour, that is a good one. That will move, not now, it will start moving after or 40 minutes later. So I watch that stock carefully, because if that one is still moving after 1 hour is gone, that will move further. So I need to pay attention. Okay, so these next slide, these 4 strategies I employ every day. I will show you through charts, and when I send out alert, if this trade alert is based off these 4, I tell you that this is what going on. So gap up reversal, gap down reversal. Every stocks, like out of 8,000 stocks, every day, or gap down. If it's a 1 cent gap down or gap up, it is a gap, but for us, the gap is at least 80 cents or $1. So you can set up a window where you can say like this, opening price of today is $1 or greater than yesterday's close, then that is a gap up, right? So I have done it. So some stocks come on this window, gap up. So when the stock gaps up, the stock gaps up, then it comes into my attention, right? So it comes into my attention that, okay, this is stock, like for example, Apple. So Apple moves up, will it continue going up or it will fail? So I'm watching it. FB gap down, will it move up or reverses to the upside after gapping down, or it will continue going down? Where is the resistance level? So you have to understand the support and resistance and the trend line, all that is to trade gap up, gap down. This is highly sophisticated strategy, and you really need to master. But once you master it, every day there is something going on. So let me explain a little bit. Gap up and gap up reversal. So gap up is the stock gaps. Apple, I'll show you the chart. So for Apple, gap up reversal, the stock gaps up and then it reverses. So the reason for, there could be any reason for gap up, but when the market opens, there's no further buying. So there were some orders, there were some excited traders, there were overnight orders. So that stock is gapping up at the open and then it fades. So you can watch the stocks which have the potential of gapping up during pre-market hours. So you just wake up a little early, like I wake up at 5:30 instead of market open at 6:30, and I'm in the office at 5:30. And then I sort the stocks which are having activity, and then I say, okay, these stocks are the one which are could move. So I take those stocks and move them into another window. to see if they will really move gap up. And if out of those 10 stocks which look like a candidate because of the earning or some news, there's something going on. If the stock gaps up, then I look at the one which is gap up and I'm interested, saying, okay, so this stock gaps up. Now what's next? Where did it gap up? The gap up needs to be above some resistance level, not below the resistance. So identifying the for gap trade, you need to identify the resistance level. So if the stock gaps above the resistance, it's a good trade. If it gaps just below the resistance, it's a fade trade. Like MU was 2 weeks ago, it gapped up and we had a position and we sold right at the gap. Um, so even when the stock gaps up and below the resistance and then it pulls back and then it reverses, it's not the candidate to go long. You really have to wait for the stock to come back to some meaningful support level, consolidate at that level, and then it shows when it shows its move, then you get in. I will explain to you through MU chart. Then when it gapped up, we had a position we sold. Now it's getting ready to go long. So I'll explain what I see. So gap up reversal. So gap up, always watch the resistance level. For gap up, you also have to watch the pre-market action of the price. Maybe the stock has done its move during pre-market hours or after market hours. So you need to know what was the low or high during pre-market hours or after market hours, where it was trading. If the stock announces its earning and it's moving during pre-market hours and it has done its move, so it has gone to 110, suppose, during pre-market hour. Now it regular hour and it's trading at 110. So you need to know the high during pre-market hour. And now it's trading at 108. So that's the 110 is the resistance. So be careful in going long at the gap up. Gap down. Gap down is the stock where some news bringing the stock down, right? So there's a news, there are some panicky sellers, or there is a genuine news. So the stock gaps down, boom, and it's falling furiously. A lot of stocks just keep falling, and they never stop falling. They fall for the whole day. They fall next day, third day, the 3-day continuous move. So major news affecting the stock. But a lot of stocks, they gap down for just no reason. Panicky sellers, they sell, someone else realize this is a good buy, and then they buy it, right? So when the stock gaps down, look for the support level. And then don't hesitate to buy, like Facebook. When it gapped down, it was right at the open. I sent the alert saying I don't have any FB position before. I don't have FB position, but I did send the alert on Friday that this FB is a candidate. So one of my member, Kareem, he sent me alert. He said, I'm buying, I'm going long. Based on the 5-minute chart, you taught me how to read, and I'm going long. So when you go long, you have to be if you are aggressive, and then you have to be aggressive in exiting it, because the initial buying can subside. So that's what happened on Friday. We hit the resistance and it subsided and it pulled back. So the entry was right at the open, boom, get in. And this kind of trade works with the weekly option or a short term, like two weeks left, where you are not paying too much money, and you get in and you get out. So this is a kind of aggressive trade. So hard. Some gap down occur right at 200-day simple moving average, at 50-day simple moving average. So good ones. So pay attention to the 200-day moving average, 50-day moving average. It doesn't mean that you will make money right at on the same day. You may make money through buying shares. Option is very hard unless the reaction is fast and furious to the upside. So I do trade gap down with options, but the action has to be gaps down at the support level, and now it's to the upside. You buy some options and you look for the gain of 20-25%, and you are out. So that's the gap down reversal. So look for 200-day moving average, 50-day simple moving average, some major support, and see the gap down reversal is occurring. If it occurs, then you get in. I have a 2-week trial offer for $17. If you are not a member of Swing Option Service, if you have not taken the trial before, you can take a trial for $17. Send me the email which you see on the screen, noshi@financialmarketswizard.com. I'll give you 2-week trial, and if you like it, you can continue. I also have a 6 program. If you are interested, send me email. It's a 45-minute strategy session. I'll talk to you about it and see the needs, whether you fit in for the program, whether the program is fit for you, and then we go from there. Okay, so here's AMAT chart. So AMAT, you see, I'll explain some charts here. So AMAT, this support line, so I drew this line and I went long here, right here. So when I say I go long, it means I went long and I send the alert to all the members. So we went long here and you exit. So we exited. So every time you see how the support is held, you need 3 touches of any trend line for that trend line to be valid. So the more touches, there it is, the more valid that support is. So 3 and greater. So look for 3 and greater support. You see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So 15 touches. How many touches you need? So 15 touches. You need 3, but there are 15. So went long here. Don't need to. And when you go long and the stock goes against you, just hold. You have to know what you're doing, right? So you have to still be convinced that this position will go in your favor, and any dip is your opportunity to buy more. So any dip or any touch to the trend line, you buy a little more if you can. So the stock pulls back, close at this line, pulls back, go back, pulls back, touch here, pulls back, right there, sitting. It's like a one giant support. And boom, when this move occur, if you're watching it, okay, you need to ask question later, act first. So buy, then 50-day moving average. 50-day moving average acts more as a support than as a resistance. So 50-day moving average is sitting right below 50. You just watch for next day, see what's going on. You know your target. So you have to know the target, exit. Don't wait for above and then what it will do. We exited right here. Don't need to worry. There's another trade better than this initial trade, initial move. So this is Baidu. We were long on Baidu right here, exited here just based on this chart. This is 8th January. So this is the entry right here. So if it's again the same support line, touch. How many touches? Like 2 dozen touches, and then this move. When you see this move, don't think of don't hesitate. Don't look. Don't say, okay, is this indicator fitting or is this my studies telling me right? Let me check the news. What's the news? Or let me confirm with my friend. Take some action. And if you're not comfortable, then when you see the move here, you exit. So this is what happened. We exited right here, I think, or here. I think here we exited here. 250 was the target. Right at the open, we exited. This one, the CSTR, I don't have any position. I did not trade, but I'm just showing you. You see, it's sitting moving average. So it doesn't want to go down. So it's just sitting here. So when you see the move closer to 348, 349, 350, it doesn't have to be exact 347.92. You just 349, because they know that you want to buy at 347.92. They will come and buy furiously at 350. So just watch 350 level and get in. It seems this 200-day simple moving average is the support. This chart is Facebook, right? So you see how these lines magically work. So this was the resistance line. So if you had a position, you should have exited long, right? I always exit. If I don't exit, sometimes I pay the price. So this was the resistance at 188, and this is what happened. Boom, fell, right? So the news came out, it fell on a very big volume. So now, how do you trade this? Um, First of all, you should watch. Gap down is not for everybody, right? Gap down is for those who are in the market. They're watching pre-market action, they're watching after-market action. So in the pre-market, it was down. You know that, okay, this is 180, 179 is the support, and you need to just at the open buy if you can. When you look at the 5-minute chart, the Facebook 5-minute chart, it made a double bottom. So when 5-minute chart is making a double bottom, you can go a little aggressive. You can be, if you are aggressive trader, you will go long. So this is what happened. 5-minute chart gave entry. I didn't do anything. So I'm not saying that I traded and made money. I did not do anything. I just watch and I send the alert in the open that FB can be a long candidate. So I will watch. So the entry was right at the open and exit fast. Now I will watch Facebook to see what it does next few days. So we are not the only one which we are looking at here. 179, 180 is the support. The whole world knows that, whether this holds or not. I rather prefer that it goes down a little more, like a knee-jerk reaction, falls towards 175 right here, and then it holds, then we buy. So then we decide to go long. So prefer another $5 move down. It may not happen. This one is NVDA. We trade NVDA a lot. I showed you the chart. This is the 8 January chart. So NVDA is again, how many times it's held its 190, this support line. We were long and we exited on a big day, news day. Now it's sitting, it's deciding to make its next move, and I believe it will cross this resistance and it will go towards 250. And yeah, so it's just sitting there right now. It will make its move further up, because there is, if you draw this resistance line, there is a move here towards 235. So there's another $10 move coming in NVIDIA. So you can watch NVIDIA. This is PII. We traded based on this chart. You see how PII held the 50-day moving average, and it was sitting right below the resistance. So chances. So I said, okay, the 50, which one is, if you ask someone, should you go long or go short, that person should say like this: I will go long, or I will wait for it to this resistance. There's no short here, because this 50-day moving average is rising and this is a strong support. So you would wait for pop, Or if you're aggressive, you would go long. I went long, send the alert to buy PII, and waited for the pop, and the pop occur, and we got out with this. So we got out PII on Friday. This one, Tesla. So Tesla, when Tesla made this move, this is where we went long at 315. You see, so it hammered the base. It's not a hammer candle because hammer candle doesn't have a upper shadow. These are called shadows. The lower shadow and upper shadow doesn't have, hammer is not, it should have a very low upper shadow. Like here, you see this hammer is, this is a hammer because it has a low shadow. This one is a long, this is like a, it's spinning, a spinning top. So but the point is, when you see a move like this, Tesla is not for everybody. Tesla is aggressive for aggressive traders. We went long on Tesla on this move. We said, okay, this 308 is the bottom, 305 is the entry here, 315, sorry. So we went long on 315. Next day it did this move. So it's okay, it's poking, it's not above 50 days, but then it made this big giant move. So this giant move was good enough, $800-900 per contract. And knowing that this is the resistance at 336, we exited. It went to 340. We had a trade in our debit service also, so we closed that trade in the vertical call trade and the long call. So this is a giant move expecting, and it happened. So this was the entry right here, 315. VMC, we don't have any position, but I just want to show you the chart. So see, the VMC broke this resistance line, right? Now it broke the resistance lines, but it closed. So unless you, I spotted this here, but I did not trade. Unless you got in here, right, when it broke the line, and then you exited on a this day when it made a big move. Uh, it's aggressive trade. So now the stock needs to pull back to this resistance line, which is now support, and it tested well. So it's giving another entry to the upside. So this was the entry is to the upside. So it looks like VMC will go higher. Disney, we went long on Disney based on this candle. It was not this when we traded it. It was right at the top here, close to here. And we said, okay, we will go long on Disney. There was immediate buying at the open, but then the move faded. So I said, okay, now the move has faded, but the low has not been violated. So this chart was prepared on January 9, and you see, although it broke, but then what happened? This is the move. This is the day where I bought more. I send the alert, buy more, and this is where exactly we exited, knowing that this is the resistance line. So we entered here. It broke, not that much. If suppose you exited, I did not exit. If you exited, it's too early to exit. Here's another support, this major big candle. On this day, you need to buy more. It's validating your move to the upside. And then right at the open, you had another opportunity to add more. And this is a tight resistance area. This is where you need to exit. So we exited from Disney. Now we just want to wait for it to break this resistance line to the upside. Gilead, okay, so we went long somewhere here in this area. So you look, and the reason we went long because that day there were other biotech stocks which were moving up. So like Celgene and Gilead and others. So we went long on Celgene and Gilead, and this is This is the support line, right? This is another indication when the stock moves big up from the support, it's telling you there are buyers willing to buy. So confirming your theory to go long. So this is another your confirmation. Then let's say you still have it. You still have it. It's still holding the 50-day moving average. It's sitting right here at 50-day moving average. Then it broke furiously to the upside. It went up non-stop, and we made good money on Gilead. So the move came and exit. So it can go up, but we exited. Goldman Sachs. So I kept showing you the chart that Goldman Sachs is going to move up. It's doing its up and down counter move. The financials were not moving, but now the financials have started moving up. So this is the strong support line, 250, 251. Here's the support line. And like C, Morgan, Stanley, JPM, Goldman Sachs. So we had position in MS, we had position in Goldman Sachs and C. So we logged S and C, and this is the Goldman Sachs. Choppy right now is choppy, but then you see these candles on Friday, clearly on Friday and the last 3 days, clearly telling you that Goldman wants to move up. These are the bullish pin bar move coming in. GS wants to go up, and it can go towards 265 area. So Goldman Sachs. LVS, on the day we bought LVS, Win and LVS, both of them were moving. So when few stocks in the same group move, you take a look and then decide if it's worth going long. So we went long on both LVS and Win, just based on this, the support, right? Double support. When there is a support under the support, it's a strong support. So there is this rising trend line is a support, and then there is a 50-day moving average support. So there are two supports. So when there is a support under the support, it's a go long, and this is what happened. You see continuous move up. LVS, I exited already, took the profit, holding Win. Showing you a market chart now. MRK is choppy, but it was holding this 56, 57 level. So I said, okay, it's holding 56, 57 level. The biostacks were moving, so I went long. Just a second. I went long on these stock on MRK also, and just waited for it to pop. Came like this, you see. So it's showing the support right here. And so you position yourself, and boom, this is the time you need to exit. Gap up, exit. At least take profit on your majority of your options. The exit depends on what you have. You have shares, there's no exit maybe because it still have potential. If you have an option and it's expiring in 28 days, the move you were looking for, there is an exit, because it doesn't matter if the stock further moves up 2 points 7 days from now, you will still get the same profit because of the time decay and etc. So it's better to catch that move and move on. But if you have shares, you can hold. So exit, same for everything. People confuse that, is there an exit? It depends what you have. Do you have option which is expiring tomorrow? Yes, there is an exit. If it's 1 week, maybe not. 1 month, maybe not. 2 months, you have plenty of time. Or you have shares, yeah, hold it for 61 target or maybe more. So there is this gap filled, right? So entry was here, this gap filled, then there is a gap here. So exit depends on what you have. This is SQ chart. So we entered somewhere here and our entry went wrong. I entered based on this 50-day moving average. So I said, okay, I'm going long. And I had a lot of shares in it and was losing big and sweating. But you see, one of my member made, I think 35,000 or 55,000 Jim C. You can ask how much he made. So on this trade. So what he did, maybe he did the same thing. I kept saying SQ will go up, go up. So this was the support. So 37, we entered at 37.50. This 34.35 was another support. And he accumulated a lot of options at half the original price. And this move was the one where exit came. So this was the move. So I already exited with SQ. So this was the support, 35, 34. And I kept telling you that SQ will go up, and it did. Okay, win. So now we have win position, and we entered based on this support line. I didn't draw any support, but you can see all these candles telling you that win doesn't want to go down. It wants to go up. And LVS has already gone up. Win is still, but on Friday, Win also showed its move that it is getting ready to make its move to the upside. And the 50-day simple moving average is the strong support. So we entered based on this, and we are just waiting for another 2, 3, 4 points up move towards 168, 170, and we will exit. So Win is ready to move. You see, on this chart was prepared on Friday. So when you have two stocks in the same category, one is giving you good profit, take that profit. One which is at break even or slight loss, hold it, and the move will come because the money will rotate. So they will buy from LVS, they are buying now. From Win they may go to MGM. So if you are in the two position, you at least take profit in some, because when the move goes against you, it will go against you in all your open position in the same category. So if you have open position in C, MS, GS, you are in profit in one, you're losing in one, you take the profit in two, worry about the third one later. It will turn into profit, or you may exit with a loss. So same for energy stocks, so same for gold stocks. So don't expose too much in one group. This is CVS. Don't have any position, that I'm showing you the chart that is holding its support right here at 56, 57. It may pop up. Oh, it did pop up, sorry. So on 10th of January, I spotted this. I didn't do any action. I didn't take any action. Sometimes you don't take any action because you have too many open positions. So you're just monitoring it, let it go. Sometimes you let the money go, it's okay. And this is what happened. It moved up. This one is DAL. DAL was sent as an earning trade. So we entered into DAL on 10th of January based on the earning coming up. And so this was a move. I saw this move and I said, okay, I need to position myself for earning and send the alert to members. What happened? We exited Dell. Now I wanted to test Dell to test 56, 57, sit here, and then it may give another entry long. So let's say DAL came up with the earning and is moving up, right? So take a look at other stocks in the same category. Do they look good? They may be looking good, because if one stock is giving you a good earning report and the other stocks have not announced their earning, they may also move. So you need to go into those stocks which have not moved yet and they belong to the category. Their earning is coming up, so position yourself. So what we did, so Dell is the one, right, for earning trade. And I did send this alert to some other services. I have 8 services, so send to like three services. And then I found another stock. So I said, okay, I'm positioned very nicely in Dell, looks good. Let's look at the other airlines. So what other airlines? So Okay, so this is what happened in Dell. It keeps going up. So we exited on earning, we made money. So I'll show you the chart of LUV. I think I prepared LUV chart. So we went long on LUV also, which is Save Airline. We went long, and we also I looked at American Airlines. It was looking good, but I hesitated. I did not trade because I had two positions in the same category. So I said, okay, I let the third one go. So, but I regret it. This is Macy chart. So I show you why I went long on Macy and made money and why we exited. So this was the day when Macy was breaking his resistance line. So we went long on Macy, both on the swing service and vertical service, vertical calls. So this is a major break. So it was poking its nose right here at the resistance, but was not breaking it. But when I saw this break came, so I said, okay, now I need to get in long with the Macy. So we went long on Macy, and the target was 28. But they came in right here and started selling. So this candle was looked like a reversal. The screenshot is taken after we exited. So it was looking, the candle here was looking not good. It was like a shooting star. It was constantly sell off was coming, so we exited and locked our gains. So it hit this resistance. So knowing where is the resistance and the seller may come, you have to take action. If you don't take action, if you're still a little late, profit there, don't hesitate to take that profit. So for instance, if you see $1,000 profit right at the market open and later you see $500 profit, that $500 profit is still good because next day that 500 may become zero profit and then zero profit may turn into $500 loss. So we exited right here. This is SBGI chart. I'm just showing you this for your learning. This again is held its support and this move came. If we have spotted right here, we would have got in. I missed it and it's hitting 39. This is American airline chart. So this is again American airline chart along with the DAL. All airlines are moving up. So this one I spotted, but I did not take it because I had position in two other airlines. This is car. Avis budget is breaking its resistance. So keep an eye on car. It looks like it's going up. This is Comcast. Again, Comcast broke the consolidation range. You see here, this is where we could have gone long in the middle when it broke this range. So what happened if you miss the move? It doesn't mean that you just completely ignore that stock. Just keep it on your watch list and see if it gives you another entry. So if it gives you entry, you are lucky and you get in. Otherwise, just ignore it. There are other stocks. This is FLR. Just like Boeing, it broke the range. See how beautiful it's moving up? Tiny, tiny candles, but moving up. And it broke on Thursday, it broke this. Well, I didn't catch it, but I have it on radar. This is LB brand. So this is what I saw on LB. It held this 200-day simple moving average. And I said, okay, it's holding its 200-day moving average. I better get in long. The chances, what is my probability of going up? The probability is high that it will go up. And I exited right here above 50-50. I think I exited on Friday at 50-50 level. This is a Liberty Global. Is moving up furiously from the support line, which was resistance before. So watch the break of 3650. This is LUV. Yeah, this is the LUV chart, which we went long and it just kept going. We exited now already and locked our gains. This is SWKS. So it came on radar and I said, okay, it has this resistance here. I'm not sure break or not. I wait for it for a few days or next move, but it did break. You see, it broke. So this was the entry for SWKS. It tried to test 100, break of 100. It did not. Next day it tried again. It did not, but then it broke. So now it's going up. So SWKS should be on your radar. URI should be on your radar. It's breaking its resistance line, 180. So see if you can catch the move. This is VIAB. This is a solid chart. You see this hammer right at the 50-day moving average. So this was the entry here. You still have the potential if you can cash on the pullback towards 30, get in. But this was a solid entry right on URI. Exxon, you see the previous resistance line is acting as a support. How many times it's testing 86 level? One time, two time, three time. So when you see this test going on 3 or more time, you go long. Don't wait for to stock to tell you. It's telling you already that I want to go up. So Exxon Mobil wants to go up. This is the Apple chart. So Apple chart prepared on, we had two strikes. One is February 170, we logged gains. We had 175, February 175. We still hold it. And I was looking for a break of 176 plus. And so it gapped up. So I said, okay, let's see if it wants to continue going up. So to me, it tested and confirmed Apple wants to go up further, and it may go towards this resistance line, which is right at 180, 181. So knowing your exit before you, right on the day when you enter, keeps you on the right side of the trade and you're willing to take profit. So don't change your mind when your target is hitting. Out of nine trades out of 10, you will be happy that you exited at the right time. One time you will regret that you exited early and you left money on the table, blah, blah, blah. But most of the time you need to know your exit and exit based on the conditional order described in my 85-page guidebook. Adobe, we had a position and we exited at this level and it continued its up move towards 194.50. So if the stock is trading at 194.50, just think of it as going towards 200 level. So Adobe is a $200 stock now. So once it crosses this resistance line above 194.50, you get in and hold on to it, like buy March calls or something like that, and hold, sell towards 200. So sell at 200, is going up. This is Bed Bath and Beyond. So again, this 50-day simple moving average is holding it well. And if it breaks, you get in. Already there's an entry here. There were a lot of entries at this level. But if you are not in on the next move up, boom, you get in. And watch the stock reaction at 24 level. So it's like you know it. You say to the stock, I know what you're gonna do. I already know. So let's see if you do what I know. And if it does the same, like break above 24, okay, you hold it. If it's failing at 24, then you say, okay, I know I'm going to exit, and you take your profit. Sometimes I receive email, like we bought, suppose, option at $1.55, and I send alert, okay, we don't have any profit, like it's trading at $1.70. Take your modest gain, move on. I receive an email saying, what gain, modest gain? There's no gain. So I say, yes, I know, but we already locked 5 other positions with gain. This one doesn't have much potential left because of a lot of other things like the market situation. Maybe we have a better trade. Maybe the stock is facing resistance. Maybe the time decay kick in. Maybe there's a new trade coming in. So 50 cents, 15 cents is like 15-20% profit. Take it, move on. That $1.55 option you bought, which is at $1.70, it may be trading at 75 cents after a few days. If you don't take the trade, it may go to 250 also. Okay, so EA, you see this electronic arts is sitting at 200-day and 50-day moving average. So when two moving averages are giving you indication, it's a very strong support. Both moving averages are at the same place. So take the trade. Don't hesitate. Don't look for any indicator that RSI is what, MACD is what. Should I buy? Should I not buy? Just take the trade. Just take the trade and wait for the move and get in and get out. 200-day, 50-day moving average is telling you it wants to go up. If you want to, suppose you want to wait a little bit, wait for this candle to break, which is at 114.10, 20 cents. So just think like this. If you are also looking, if you're looking for this break, others are also looking for this break too. So you're not the only smart person out there, right? So you are competing with professionals, from Goldman Sachs guys to JP Morgan guys. They are very sharp. Goldman Sachs invest, like 10 years ago, they invest $225,000 on each of their employee. So how much you have invested in your education in stock trading? Ask this question to yourself. How much? What resources do you have behind you? So what news feed you have? What is telling you? So the thing is, if you think you are smart, others are smarter than you. So they're buying here, but you should know that 114.25 is another entry. So you set the alert. If you're already in a position, you set the alert for this level. Sorry. You set the alert for this, and then you get in. Don't hesitate. Get in, buy. So set the alert based on past candles. Like this candle, suppose this one 115, set the alert. If this one breaks 115.50, set the alert, go long, buy more, or you exit, depends what is EA is doing at this level. So set the alert for 200-day moving average, set the alert for 50-day moving average, set the alert for 105. In case 2 months from now, suppose 2 months from now, EA hits 105, your target, your alert system should tell you EA hits 105 low. So then you look at it, then you say, oh yeah, this is perfect. I was looking for it to get long because I didn't want to go long here. Now let's see if it holds 105. If it holds 105, you go long. MU. So this is where we exited on MU. You see this? Actually, we exited early, but this was the exit. So MU gave exit here, then it pulled back and it held a support line right here. Now it's telling us that it wants to go up. So go long an MU based on just this line. It's testing 1, 2, 3, 4, 5, 6 touches. Don't need 6, need 3, but it's giving you 6 touches. So MU is going up. SRPT, we don't have any position, it's breaking the resistance. You can see on the chart. STX, it broke the resistance at 50. So any pullback towards 50 and hold, you go long. SYNA, I must admit, I hesitated. I spotted this right here and I did not take the trade. Next day I regretted. So it gapped above this 200-day moving average. So now it's sitting at 200, above 200 is bullish. If we had position here, we would have exited here, because if you buy option here and next day the stock does like this, it's a big gain for your option. So you take profit in option. If you have shares, you can hold it, but for option, you take your profit and move on. UHS, again, support line is holding it. See the test. This was the entry. I don't have position, but I prepared the chart to show you this is what it does. And now it's sitting above this resistance of 116, is going up. And here's the gap. Always look on the left side of the chart to see where are the gaps, where are the resistance, where it can stop its move. So you know this is the gap it will fill. This is where it failed at 122.50. So I better set the alert at 122.50. Maybe it will fall down again. See the furious fall? It can fall back. Who says it cannot? It can. There are sellers here. Anytime when you see a stock like this, there are sellers sitting. So maybe the buyer, those who were buyers are sellers. So they are waiting for it to come to here and then sell. And you will be their perfect target. If you don't sell your stock, they will, they will sell and then you will regret. VNTV, I don't have any position. I'm just showing you it's going up. This one, another one, Exxon, 50-day simple moving average being held like it's gonna go up. So watch XON, ON. Now the stock charts are over. I'm showing you some charts related to market. You see S&P is trading at this channel, and it broke the channel to the upside. So it's now it is trading at uncharted territory. So when the stock is or when the market is trading at uncharted territory, a lot of traders don't have clue or where, but there are techniques which you can use to extend the target. So the target for S&P is 3110 or 3120. There is a big move, 400 points or 300 plus points in S&P coming up. So stay in the market, stay long. The market is really bullish. This is a Dow Jones chart. Dow Jones was hitting this resistance. See this channel? And it broke this resistance at 25,600. Now it's trading at 25,803. Is going towards 26,500. So if you don't have a position in Dow Jones, DIA calls, you can get in on the pullback, knowing that Dow Jones is going to 26,600 near term. So 206, 800 point move coming in Dow Jones. This is the long-term chart of NASDAQ. You see the NASDAQ is broke out. It's going towards 6,900. So NASDAQ is also doing good. This is the Russell 2000 chart. It's facing resistance here. It's still at 1600 level. So watch RUT, or you can watch IWM and see what IWM is doing. But the market is bullish. It doesn't mean if IWM not doing good, then the market is gonna go down. You have to watch all the indices and then make your decision. So watch IWM, watch TIA, watch QQQ, watch SPY, and then you make your decision. But believe in this target. S&P target is 3,100. Dow Jones target near term is 26,500. Immediate, like maybe 2 weeks time. Again, I have a $17 offer for you, 2 weeks. If you are not a member, you can take the offer. I do send out in the morning this offer, and this is only for those who are not members or have not taken the trial. I also have a 6-month coaching program. If you're interested, send me email and we will talk for 45 minutes. And I will begin my another presentation. So hang on. The next webinar will be on January 21st, 5 p.m. Pacific, and it will be like this. So hang on. This is my first presentation. I have other 3. I have all the time. That's what I do. Okay, let me see which one I can show you. Okay, let me show you this. It has only 4 slides, and I receive a lot of emails, and I will read your question, and I have email questions. So don't worry, tomorrow is a holiday, so we can let me drink juice. I'm drinking mango juice, so you can have some mango juice and some nachos or whatever. I miss guava and I miss mango, but I have mango juice. Okay, so how I play earnings. So people ask me questions and I have a service. on playing earnings, and we do pretty good. Some trade goes bad, while there's always a loser, but most of the time you can make money playing earnings. But you need to know, first of all, this service is not for those who are just starting off in trading, because this is an aggressive service. So this service is for those who are already in the market, they have seen ups and downs, or they have a bigger portfolio, they have a bigger risk appetite. In other words, they are player. So they are player. They know how the market works. They don't freak out on one or two bad trades. They can manage their trade. They are professional themselves, and they just want to trade or get some ideas from other people. So this service is for those. It's only $147 for the whole 90 days. So I'll tell you how I do it. And in my next presentation, next time, I'll improve upon it, because this is the first time I prepared just like today. So there are many ways of trading earnings. And there's one way of trading earnings. This is one of the way of I trade, is anticipating the earnings run, and buy simply long calls and long puts. So what I mean by anticipating run, suppose the earning is coming, the previous earnings were good, the market is bullish, the other stocks in the same category doing good, they are announcing earnings positive, and suppose we are talking about the long calls. So the earnings is good, other stocks are also having a good time on the earning announcement, market is bullish, so everything looks good. So what are the stock is at support, and there are some buyers. So what are the chances that an earning is coming up in 2 weeks, the stock will not give you some profit? So I look for this kind of setup. If the stock is moving from proper support, the other companies are announcing positive earning, and this stock is about to announce earning, and my outlook is bullish or positive effect on the earning. The earning can be negative, but what is the effect of the earnings? That's what we are looking for, right? So what is the effect on the stock? It can be terrible. So if the earning is effect you expect to be positive, you go long call, like we did in DAL, and we have other open position in earning trade. So you can go long via you can go long via calls, right? And you know the long earning date is coming in 2 weeks. So before the stock hits the earning date, your objective is to get out with the profit. So look for that setup, and when the stock, you exit, because you can be trapped in the earnings announcement. So that's one way of trading earning. Go anticipate the earning run, whether to the downside or to the upside, and see the sentiment, see in this category, and get in and sell before the earning announcement. So long call or long put. Next way is aggressive earning play. So this is the aggressive earning play is right before the earning announcement. So suppose the earning is coming up after hours, and you look at the chart and you say, okay, this is really hard. You look at the chart and then you decide, make your decision whether to buy puts or buy call. This can be a coin toss. The best way to do it is to see what the other companies in the same category have done, where the stock is in its overall trend. Is it facing, because if it's facing resistance, and if the stock even announces a good earning, there are sellers and they sell even though the earning was good. I give you example of Oracle for last 2 quarters. It's doing it. It's the Oracle announces earnings positive, but it falls down. So there are a lot of sellers above. So what is the current sentiment? Where is the support? So in case, suppose you want to go long, you have to know your exit. So stock falls, where it will fall. So you identify that level. Will you have enough time if you're buying option? Do you have enough time on hand to manage that trade if it goes against you? So do you have enough time? Do you have some reserve capital to average down the in that position? Maybe you have to buy another lower strike or next month. So you have to take into consideration all this extra money you have. You have you're willing to take risk. You have analyzed the past history, your current sentiment, where is the support, where is the resistance, if the earnings, how much the stock moves on earning. If the stock moves up, it has a positive effect, and you're buying call, where is the target? Then you have to watch the pre-market action, after-market action, because suppose the stock gaps up and in the pre-market hours, and then when the stocks gap up at the open, and you are excited that you will make money, the market maker doesn't open the option, and you are just desperate to sell, and you see the move down. So you can be trapped in that too. So this service is not for conservative traders. So, but we do trade earnings, and we have a service. The third way of trading, there are many ways, straddles and strangles, which I may discuss in the next presentation. I'm discussing the third is after earning announcement. This is the best way of trading earning, is after, let's say the stock announces its earning during pre-market hours. So you should be watching that stock action during pre-market hours. What's the low and what's the high? And you note it down, the low and the high. Then suppose the earnings was announced and it looked good, and you say, why the stock is going down in pre-market? Well, you don't have control over that, right? So you just say, okay, I'll just watch it. Then during regular session, if you see the reversal coming, like I discussed with you about the gap down reversal, if you see the aggressive buying is occurring, time it on 3-minute chart or 5-minute chart, you can employ your or gap up reversal or gap down reversal and act upon it and take the trade. So this is, I am really good at it, and I capture the move. So earnings announced, stock gaps down, and it becomes my favorite. I said, damn, I'm gonna watch this stock now. So the stock reverses furiously, I go long, and I know where support and where it should hold. So after earning announcement is a good strategy. So I discussed with you 3 strategy: anticipating the earnings run, right? The company announcing earning 2 weeks later from now, you go long. The next one is aggressive earning play right before the earning. This is the most riskiest. Be wrong, 50-50 chances. The third one, which is the most favorite of mine, is the earning announcement. So earnings reaction, you watch the earning reactions, and then you capture the move, whether to the upside or downside. So earnings service is $147 right now, a promotion offer for you for 3 months. If you are interested, send me email and I will send you the PayPal link. Otherwise, it's $197 regular price. Now, the third presentation, I explained to my members, where is that? Okay, how many slides? 9 slides. So hang on, because I received this email, question on this email, not email, question on this topic. So I prepared the presentation, although it's in my guidebook. Let me explain how the targets work. So you are in a better position to maximize your gains. So this presentation will help you in maximizing your gains. So just like we focus our positive energy onto a desired result, so suppose we want to go from A to B, we focus all our energy on reaching B, right? So the target B, and then you achieve it. The same thing is stock target is determining the stock target is an art. So just like you focusing your energy to reach the desired result, you have to know in your analysis where the stock will go when you after you enter the trade. So this is the most important thing, where the stock will go once you enter the trade. If there is no potential left and you enter the trade, doesn't matter what your desire is, the stock will not do its thing, and then you will just sit there waiting for the move, and the move is not occurring because the stock is can be either at the overbought position or the oversold position or facing some resistance. So you have to go through analyzing the target, the resistance, the support, where the seller can come, where the buyer can come. So once you analyze your target and you know that okay, this is the target, then the stock should follow your target. So the stock should follow your target like a guided missile. It can deviate from the target, from the path, but eventually it should come back and then it starts following your target. So let's say you enter at 90 and your target is 98, and it goes to 92, 93, then it comes to 90, then it goes to 89, 88. But your original analysis was such that it will go to 90, should go to 98. And when it goes to 98, you should be taking your profit. So the stock should follow your target like a precision guided missile. Now, I provide in some emails, I provide the target range because I don't want to, there's no fine, granular green, yellow, and red target. But sometimes the targets are such, they are far apart. I provide you with the three kinds of target: green, yellow, and red. So understanding green, yellow, and red target and what to do on those when the stock is hitting those targets, you will be able to maximize your gain. So I will explain what to do on these three types of target: green, yellow, and red. So when I say green target, it means it's an immediate target. The stock has the 95% hitting the target. So it's like almost confirmed. So when the stock hits the green target, at least sell 1/4 of your position. So for instance, if you have 8 contracts, you sell 2, at least take some profit on the green target. And the stock is expected to continue towards yellow. So expect the stock in, and then it will move towards yellow, but there's nothing written on stone, right? So there's no 100% guarantee. So at least you have taken some profit. So if you had 8 contracts, you sold 2, you took some profit, your the 6 contracts has gone down, so you are a little safer. Usually I send the alert as sell some, sell some. So I say in my email, sell some options. So because it's the first target which is getting hit, so you should sell some. So that's the green target. The next target, I call it, is yellow target. So this is the second target in the email. So something like this, I say the first target is $51.35, and the next target is $52.90. So this next target, $52.90, is the yellow target. So it's like a caution traffic signal that the stock can move, should slow down. So second target, and it is after green target, and it has 85% probability of hitting. So it's a pretty good probability of hitting the target. But the stock can pull back after hitting it. So if you know that the stock can pull back, sell 3/4 of your original position, which means if you had 8 contracts, you sell 6 of it. So total 6. So you sold, suppose you sold 2 contracts at green target, you will sell 4 more at yellow target. So that's the thing. I send alert like this: sell majority. So sell majority, which means that you are offloading majority of your position at this target. So and if you have only 1 contract, then sell at yellow target. That's, I mean, you don't have anything, right? So you have 2, you sell at yellow. I'm talking about when you have 8 or 10 or 50 or 100 contract, then you need to sell majority of it when yellow target is hit. And what will happen, the stock will take a rest. So it's like resting at the target. The major move has come and it's over, and the stock is resting, but it doesn't mean the stock will not go up. And if you see the hesitation in the stock, the stock is not moving, like next 2 days or same day or next day, then you can sell the rest of your position. So that's the idea. At least you sold the majority of your position at yellow target. So yellow target is the next target. Green, yellow, and red. So yellow hit, right? So you are out majority of your position. The next one is the red target, which is very important. So red target is the resistance level. So this is the target where think of it that the stock will not go above red target, and you should be on alert to sell all. If it goes above red target and you still have a position, you're lucky. So this is the third target and it's after yellow, and it has lower probability of hitting the target. The reason is that you bought, suppose, at 40, the red target is 49. So $9 move is kind of long move. So it has a lower probability. And if you buy at 40, $42 target has a higher probability. So it's a green target. So the red target has a 70% probability of hitting, but it has a higher probability of missing by few cents. So it can miss by few cents also. So I give you target of 49 and it goes to 48.50, and then it sits there or comes to 47. Then you are just sitting and saying, okay, it didn't hit 49, but you have to know that it was a red target and you should have sold majority of your position earlier. So if you still have 1 or 2 contracts and it's not hitting red target, get out. So 95% probability of pulling back. And sometimes the pullback is severe. So it can be severe and the move is over, and then you will be left with that remaining position. So sell majority at yellow. So when I see this kind of move, I send this alert: sell rest of your position. So I know that I have sent you alert sell majority, and I'm saying sell rest. Or sometimes I say take your profit and hold some. So when I say hold some, then I send the alert sell the rest, because I know I send you the alert hold some. So you're holding some of your contracts. Now I'm sending you alert to sell the rest and take your extra more profit, and the trade is closed. Now the most important thing is in this slide: revise red target. So sometimes I send you the alert saying revise red target. The target has been revised. I say like that, right? And there is a reason, because the stock is breaking its resistance level. So the target which was given was red target. Now the stock is doing its thing. Some major move came. So some major news came. So the stock is moving up. So I don't want you to miss out on the gain. So I revise my target, and I say like that: the target has been revised. So you're holding it, then you know that, okay, I can hold for more gains, and then you manage the trade based on the new red target. And the target can be a bigger target, like lot bigger, because the big news came out right at that moment. So be aware of revised red target. And what happens? How do you maximize the gain? So let's say I give you a red target of 98, right? So you need to sell at 98 all of your position. But then the news came out in the pre-market, you're watching it and you see the stock is trading at 101. So you say, okay, it was 98 red, now the stock is trading at 101. And so you send me email saying, hey, Noshi, stock is gapping up, it's trading at 101, this is the news. So what to do? So you know that the red target was 98. You were happy to get out in 98, but it's trading at 101 in pre-market. So what to do? You you need to watch 98 level now at market open and see if it's safe to hold. So you have to manage the trade, or I send the alert also saying that you can hold it for 105 target, or you can buy next month strike, or you buy another strike, like suppose you had $95 strike and the 98 was a red target, now it's trading at 101. You can buy 100 strike, you had a you can add another strike of March call. So there are many things you can do when the stock is doing its big move at the red target. But you know the 98 is the support, because it was a red target and it was resistant. If it doesn't, the stock doesn't move, then your exit is at 98. If it breaks below, you need to sell. The last slide. Also, if you are watching pre-market or after-market hours action, I do that. And if the red target, suppose 98, hits during non-regular session, which is pre-market session or after-market session, then consider it that the move is over. So for instance, I give you a red target of 98 and there's a news and the stock is trading in pre-market hours near 98, 99, 98, 99. Then you should be aware of it. I also send the alert, and you should know that the target is hitting in pre-market hours. So if you have shares, you can sell during pre-market. But if you have options, you cannot sell. So you're holding it and praying that the stock, gaps up at regular session and you are able to sell properly. So as soon as the stock gaps, market opens, the stock gaps up, and you don't see move coming in as you expected, you sell your position and you get out. And I send out detailed strategy to members what to do. Thing is occurring pre-market alert. I send out that we have a position on this stock. It's gapping up. This is the news. This is the level it's trading. This is the revised target. This is your strategy to exit and take action. So you need to take action on your position. The other action is you can add more to the position. So I send the alerts, buy more. So you already have a position, you can buy more with the new strike same month, or the new strike with the next month. So you have a February 75 calls. Now the stock is already trading at 80. You can buy March 80 calls or March 85 calls or 8250 calls, whatever is available. You can take, if you are aware of the spread, you can create a spread. You can sell calls against the call. So this is sophisticated. You need to sell short-term calls, another long strike calls above your position to take the profit and just ride it up. So this is another strategy I teach in the debit spread webinar. So in short, we talked about three kinds of target: green, yellow, and red. So green, yellow, and red, and I provide the alert in the service that this is green target, this is yellow target, and this is red target. And most of the alert comes with the sell order. So I do provide email saying, okay, take your profit, the target is hitting. But you, at least you should know this is what's going on with green, yellow, and red target, so that you can manage. If you're a full-time trader, you can manage it. the questions I have. Trailing stop, I don't do trailing stop in option unless I have a bigger profit and the stock is moving big time, and the stock is like PCL and Amazon, Google. Otherwise, I don't do trailing stop on options because I just exit based on the target. I give you details on earning play. The earning play service has 2 or 3 trade alert per week. So whenever I find the setup, sometimes I don't find the setup, so I don't send any alert. Or when I send the alert, makes good move. When I expect a good move, your money is worth, that's when I send the alert. Sometimes I just don't send any alert because there is no setup. Sometimes there are many setups. So it could be 2 or 3 in a week, sometimes it's 0. Same thing with index service. Option service, which where we trade DIA, SPY, and QQQ. I send alert like 2 in a month, but those alerts are supposed to make you 150%, 200%, 170%, because we are capturing the big move. We are not buying and selling like in the swing option. So we go for a long move, big move, and when the move is hitting, when the indices is hitting the major target, that's where we exit. So the alert will, you may receive 2 alerts per month, but 150% gains. So that's what it is. Now another question was about the pullback. The best strategy to go long is to find the support after the pullback. If the stock is sitting at support after the pullback, then the reaction should be fast and furious. The volume should be there, the buyers are there. You should be good in reading the tape. So when you see the stock sitting at support, like Facebook, suppose, let's give you example of Facebook. So Facebook is sitting at 180, 179. If the reaction is good and stock is moving, I'll go long on Facebook, knowing that, okay, 179, 180 is the support. So identifying support and resistance is the key. I showed you many charts with the trends, and this is the way I identify. Take a look at the 50-day moving average, 200-day simple moving average. All right. So if let's see if I have any Pepsi is okay to look to hold. Anything else? Someone left for dinner. Baby is cute. Someone saying, can someone expect to make $1 million a year following your trade? Yes, if you have 1 billion, you can make $1 million for sure. So that's question is not right. If you can make $1 million a year, if you have $5,000, how can you make $1 million a year? So you have to tell me how much you have, right? So I received this email. I have $2,000 in account and I want to make $10,000 per month. So that's not right. $2,000 in account and $10,000 a month objective. That's not right objective. Yeah, indication trade is going against me when the support, major support is broken, or when I'm short, major resistance is broken. So that's when the trade is not right. So you need to identify support and resistance. And so the way to the trade is knowing, okay, if I'm wrong, I will come out alive with the trade because there is a support there. What account size is recommended to trade? For earning service, you can trade with the $2,000. Not many trades, $2,000, $3,000. I do put options, yes, but only in the market when market is bearish. There could be a big setup, good setup for puts. But if the market is bullish, then the puts doesn't work right. They tend to fail. So the odds in our favor to go with the put trade when the market is extreme bullish. So you have to find the trades in the direction of the market, not not against the market. So I don't understand how long to get to 3 million. $500,000. It depends. 500,000 into 3 million. It may take you 6, 7, 8 years to do that. All right. So let's see if you have any question. Um, I don't know about PLCE. I don't have any position in PLCE. We don't have, so I don't know anything about PLCE. That's it. If you have any other question, please send me email. It has been almost 2 hours. Thank you for coming. Next webinar will be on Sunday next week, and I will show you something else. Thank you.